Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of WTI oil on February 13th. We're on the weekly time frame. As you can see, in recent weeks, the price has reacted to its downward trend line, and this week, after experiencing more than 5% volatility, it is now trading with a bearish candle. After the negotiation sessions last Friday between Iran and the United States, the price of oil turned bullish and began to rise, albeit at a slow pace. Finally, on Wednesday, after reaching the downward trend line, it was unable to break through this level decisively and showed a rejection. And yesterday, February 12th, in response to Mr. Trump's remarks insisting on continuing negotiations with Iran, the price of oil reacted and even dropped below its weekly low. Continuing on, we can see that today, after the price opened with a positive gap, oil prices once again faced a decline and, up to this moment, have experienced about a 1% drop. We are currently analyzing the 4-hour time frame. In this time frame, we can see that the price was in an uptrend, and the trend line for this upward movement has been drawn. However, with the recent drop that occurred, this trend line was broken to the downside and was unable to provide strong support for the price. But the point we need to pay attention to is that the price is currently fluctuating around its previous lows. In this area, we previously had a 4-hour FVG that was filled by the price, and a low was formed around the 62.079 level. Now, once again, the price has reached this same area and has reacted to it. So as long as the price is above the 4-hour order block, we can consider that our upward movement hasn't ended yet, and the prevailing bias is still bullish. We are currently analyzing the 1-hour time frame. Here, we can see that in the past 2 days, the downward price movements have been much larger and more intense than the upward ones. For example, after the major drop that happened on Wednesday, the price fluctuated a lot within this range, and then we saw another big decline. Similarly, yesterday, after Mr. Trump's remarks, the drop in oil prices intensified, so in the short term, we can consider the prevailing trend to be bearish. Because even in today's movement, after a lot of effort to push oil prices higher, it ultimately broke its daily low with a single candle and dropped down. For this reason, in the short term, and as long as we see such structures in the candles, we can look for sell opportunities during pullbacks and upward corrective moves. At the moment, we can see that there is a good 1-hour FVG in this area. So, on the next price move to this FVG area at 62.61, or even if there is a deeper correction to the 1-hour FVG around the $63 range and we observe signs of weakness in this upward move, we can enter a sell trade targeting lower liquidity levels. As the nearest sell-side liquidity, we have the 1-hour FVG at $61.72, as well as the 1-hour order block. Wishing you success and profitable trades.